Hello everyone, welcome back to Finstone for You, where we simplify the market, understand price action, and focus on trading with a proper plan rather than emotions. I'm your host, and in today's video, I'm going to show you a Nifty 50 live trade from this morning, 19th August, 2026. The interesting part of this trade was that we were able to capture a 2.55 risk to reward setup. But the profit is not the most important part. What I really want to show you today is why we took this trade, how the first 5-minute candle helped us define the setup, and how the 9:25 and 9:30 candles gave us confirmation. So let's break it down step by step. As the market opened, the first thing I was watching was the first 5-minute candle. I don't immediately jump into a trade just because the market opens. The first candle gives us an important reference point. Its high, low and overall price behavior. So our first job was simple. Mark the high and low of the 9:15 to 9:20 candle. Now we wait. We don't predict. We let the market show us what it wants to do. And this is where today's setup became interesting. After the first candle was established, the market started showing weakness. The 9:25 candle broke the range of today's first candle. This was our first warning that the buyers were struggling to maintain control. But here's an important point. A breakout by itself is not enough for me to enter. I want confirmation. Because sometimes the market breaks a level, traps traders, and immediately comes back inside the range. So instead of chasing the first move, we waited for the next candle. And that's where the 9:30 candle became important. Now look carefully at the 9:30 candle. The 9:30 candle breaks the 9:25 candle and continues the bearish structure. This is the confirmation we were looking for. So now we had multiple things coming together. First, the first 5-minute candle range gave us our reference. Second, the 9:25 candle broke that range. Third, the 9:30 candle confirmed the move by breaking the 9:25 candle. And most importantly, the overall price action was bearish. We were seeing weakness rather than a strong bullish structure. That's why I wasn't interested in buying every small dip. The market was telling us, sellers are in control. Why we took the trade, 210 to 255. This is the most important part of the video. We didn't take the trade simply because one candle was red. The trade was based on confirmation plus price action plus risk management. The logic was, first candle establishes the range. 9:25 breaks the first candle's range. 9:30 breaks the 9:25 candle, confirming continuation. And the overall market structure remains bearish. Once that confirmation came, the probability of a continuation move was much better than entering blindly at the market open. This is something I always want to emphasize on Finstone for You. We don't need to predict the market. We need to wait for the market to confirm our idea. Now we will check if the price takes a support at the 50%. Now we'll check if there's any support or not by changing the time frame from 5 minutes to 15 minutes and then check 1 hour time frame also. The supports are not looking good or important and we will wait for the price to hit the target or stop loss. Once the setup was confirmed, we planned the trade with a predefined stop loss. That gave us approximately a 1-to risk-to reward ratio. And this is where risk management becomes extremely important, because we don't know whether every trade will work. But if we can control our risk and take setups where the potential reward is significantly larger than the amount we're risking, we don't need to win every single trade. That's the philosophy behind this setup. You can see market rivers, but we will not panic and believe in yourself and your analysis. If the stop loss hit, it's okay. You cannot control market. Market is supreme. It's above all. We will wait for the price and watch how it behaves near to EMA lines. After the entry, I didn't want to interfere unnecessarily with the trade. The price started moving in our opposite direction, and instead of getting emotional every time there was a small pullback, we simply followed the original plan. The bearish structure remained intact. The sellers continued to push price lower, and eventually the trade moved toward our planned target. Now we will check if the price takes support at day's low or not. Price break the day's low and we will now check if we can get more profit. I am damn sure price will go down and take support at my support line. I am changing my target to the below support line and watch the price. Let's see how the price behaves. Remember, the objective isn't to celebrate one winning trade. The objective is to understand why the trade worked and whether we can repeat the process consistently. So what can we learn from today's trade? There are 3 important lessons. Number 1. Don't rush at the market open. Let the first candle establish a reference range. Number 2. Wait for confirmation. The 925 candle breaking the first candle gave us the initial signal, but the 930 candle breaking the 925 candle gave us additional confirmation. And number 3. Respect the market direction. The overall price action was bearish. So instead of trying to predict a reversal, we followed the direction that price was actually showing us. That's the difference between guessing and trading a setup. So that was today's Nifty 50 live trade from 19th August 2026. We had the first candle range, the 925 breakout, the 930 confirmation, bearish price action, controlled risk. If you found this trade breakdown useful, make sure you like the video, subscribe to Finstone for you, and turn on the notification bell. Target hit. A clean one is to 2.5 risk to reward. And remember, don't chase the market. Don't predict the market. Wait for confirmation, manage your risk, and execute your plan. This is Finstone for you. Money, markets, strategy, explained clearly. See you tomorrow. Trade smart and be proactive. Thank you.